Let's connect with Samiran Chakraborty, Head of India Research with Standard Chartered Bank. Samiran, good morning. Thank you for joining us. Q1 GDP is likely to be at its highest level in last 8 to 10 quarters. Expectations are running high. Do you think this time around are we in for a GDP surprise?
What we are looking for is a pretty significant uptick in the first quarter's GDP from Q4 of last year. We had put out a report suggesting that this number could be as high as 6%. However, with the IIP number for June coming in much below expectation, we think there is some downside risk to that number. But having said that, still it will be a significant improvement from Q4 of last year, and that kind of shows that there is some momentum building in the economy, but at the same time is due to some of the one-off effects which will particularly be visible in the context of export numbers, in the context of construction activity, and in case of some financial services.
Samiran, so how do you see expenditure side of the GDP to shape up, and what's your view on the government expenditure as well as private consumption expenditure?
So these are very volatile numbers in their first reading, so I would not hazard a guess on either the private consumption expenditure or investment side. If you recall, in Q4, we saw a significant uptick in the private consumption expenditure number, which does not gel well with the other kind of indicators that we get. But having said that, I think the government expenditure number could be a little bit higher compared to last year, because this quarter did see some spending from actually the previous year's spending, which was deferred and was done in this year's first quarter. So that number might support the community and personal services growth that we see in the services component.
So what is your overall expectations on FY15 and FY16 GDP? Few of the economists, at least we've interacted with, they have revised their FY15 and FY16 estimates. Can we expect the same from you as well going forward?
We haven't yet increased our FY15 full year number, although we are expecting a much better Q1 number, because we are yet to figure out the impact of the monsoon completely on the rural consumption side of it. So possibly we will have a look at it once we get the first quarter's number. Yes, there are some upside risks to our current forecast of 5.3%, but still it will be difficult to get to a 6% GDP growth in this fiscal. Maybe for next fiscal we will be looking at a 6% plus number.
Just to elaborate on the agri growth further, how do you see agri growth shaping up?
It's probably too early to comment on the agri growth part, because we've seen that the sowing area has now almost covered most of the country. In fact, it is now very close to what the normal pattern is. But since the sowing has been delayed by almost a month, it could have an impact on yield of different crops, and that could have an overall impact on agri GDP. Plus the fact that the northwestern part of the country has not received enough rainfall means that there could be some risk to the winter crop as well, which is primarily produced in that part of the country. So we would have to see both these effects playing out before deciding on how much the agricultural GDP growth would be. The impact on inflation out of this agricultural GDP growth, well, we've already seen for some items prices have jumped up very substantially, although they have moderated a little bit in August. We see the possibility that in October, November, when this produce hits the market, there could be another round of jitteriness for food prices. But overall, still expect inflation to moderate till about November, but then base effect will probably take it up after that.
Are you seeing any strong signs of revival in consumer demand? And also, what is your take on the services sector of the economy? That's an important piece.
Well, if you look at from the cyclical perspective, I think there are very nascent signs of recovery in both consumption and investment. If you see RBI's consumer confidence survey, they're showing that there is some pickup in consumer confidence as well as in business confidence in the last quarter or so. That's positive, but it's not yet reflecting in the actual consumption expenditure number, probably because inflation is still a significant challenge, and the ability to leverage is still low for the corporate sector, so that's not affecting the investment side as well. So both consumption and investment, we think the cyclical recovery part will take some time to play out over the next few quarters. It's somewhere between 6 to 12 months away.
Samiran, so how do you read into the recent government steps so far to revive growth?
Well, if you look at the broad macro backdrop, then obviously some of the macro stability indicators like current account deficit, fiscal deficit, inflation, the trend on all these variables appear to be positive. Along with that, we have got political stability. So the combination of macro stability and political stability clearly creates the room for better economic growth. The challenge for us is the corporate sector is extremely leveraged, and the banking sector is feeling the pressure of high NPAs. So these two factors, they are connected in a way. Unless they get resolved over the next 6 to 12 months, the next credit cycle is unlikely to pick up. So to have a kind of multi-year secular growth in GDP, you would have to have this process completed in a nice gradual fashion. Along with that, if we can have the reforms, both the nut-bolt variety of reforms as well as the big bang reforms, then it's possible to get back to the 7-8% GDP growth mark over the next 3 years. But this process is unlikely to be a V-shaped recovery, is more likely to be a gradual one.
Samiran, the Supreme Court has stated that coal blocks awarded since 1992 are illegal. They're calling the whole process illegal. Just to get a broader perspective from you, how will this change the industrial activity? Because if coal blocks are actually deallocated, it really could inject some degree of uncertainty, especially for the power sector and the mining sector.
Well, I don't think there is any immediate impact on industrial activity, because in any case these coal mines were not producing any coal. So there is no real effect on industrial activity to start with. In terms of investor sentiment, I think there are two ways to look at it. One way is to say that whatever contracts or whatever assurances these companies had got from the government earlier, there is now a setback because the court has ruled against it. But at the same time, if some people look at it from the perspective of how courts are tackling the problem of corruption in this country, they would rather say that this is a positive say. So it will probably take a while to figure out that how investors are perceiving this. If we go back to the 2G case, then possibly at that time the impact was more negative. In the current context, the impact might not be as negative as the 2G case.